Welcome to Talk with Business. I am Alvin Hollas, and this is our first episode of Season 1, where we access, accumulate, and share with business. Today, we will be discussing insurance and financial literacy. The importance of financial education has increased drastically in recent years due to the financial market developments and demographic, economic, and policy changes. Financial markets are becoming more sophisticated, and more products are continuously offered. In addition, changes in the pension landscape are increasing, thrusting responsibility for saving, investing, and accumulating wealth onto workers and retirees. Whereas in the past, older workers relied mainly on Social Security and employer-sponsored defined benefit pension plans in retirement. Today, by contrast, baby boomers mainly have defined contribution plans and individual retirement accounts during their working years. This trend toward disintermediation is increasingly requiring people to decide how much to save and where to invest, and during retirement, to take on responsibility for careful accumulation so as not to outlive their assets attempting to meet their needs. The COVID-19 pandemic has exposed the financial fragility of the Caribbean and its people. A recent IADB report shows that prior to the pandemic, 6 out of 10 people in Latin America and the Caribbean reported that they lacked the resources to cover an emergency. As in the 2008 financial crisis, COVID-19 has revealed the need to advance a policy agenda aimed at increasing financial resilience. Financial literacy is defined as the ability of individuals to make appropriate money decisions by learning the principles that relate to the management, growth, and preservation of their money. More than ever, financial education programs should be at the center of every government's agenda. It is no doubt that persons with financial skills can better plan, save for retirement, and accumulate more wealth. Financial education programs can support the needs of emerging middle classes in managing their finances, allowing them to benefit from sophisticated financial markets. They can also be a valuable tool ensuring effective financial inclusivity of the most vulnerable sectors of the population. As a result, adding to the fight against poverty and inequality. I have realized that the number one problem that prevents most people from achieving their financial goals is the lack of understanding of basic money principles. When people are educated about the appropriate actions to take with their money, then they are more likely to save towards their goals, manage their debt, purchase assets such as a home, and make positive contributions to the economic development of their country. Educating the public about financial and economic matters is key to supporting stability, growth, and development. Today on Talk with Business, we have with us Mr. Raymond Thomas, a UWI graduate, a financial advisor of health, life, and investments at the Guardian Life of the Caribbean Limited, Mr. Odion Hillocks, a UWI graduate, an educator, a holder of a bachelor's degree in computer science and accounting, and currently pursuing a master's in data science. And last but not least, Mr. Romel Waterman, a UWI graduate, former financial advisor and team lead at Sagicor Life Inc., currently a business consultant practicing in Canada, and a project management student at Seneca. Gentlemen, welcome to Talk with Business. How are you today?
I'm great, man. I'm great for the time being.
Thank you. I'm doing well as well.
Thank you, Alvin. I appreciate that introduction. This is a big topic and I'm excited. I think the conversation is timely and I'm happy to be here.
Great. It's wonderful to have you guys with us today. And we're going to delve right into the discussion. Now, we know insurance and financial literacy are important components. However, to the average Caribbean national, we are not educated fully about these things. So I will pose the question to Romel. In your own words, what is insurance?
So there's a very technical and specific term with respect to what is insurance. And I'll start there, then I'll break it down for the reasonable person, for the ordinary person to understand. Insurance is really a financial protection solution for a significant future unfavorable event that results in financial hardship or loss. And when we talk about a future significant unfavorable economic event, see a tongue twister, we're really talking about the loss of life of a breadwinner or an illness that would cram funds that would be otherwise used within the household. But, you know, sometimes when we say terms like breadwinner and we use long jargon like a significant future unfavorable economic event, it tends to fly over the head of the ordinary person. But what we're really speaking about is we're talking about a mom that lose her job. We're talking about a dad that lose his life. We're talking about people who are contributing significantly to their households in terms by way of an income, something unfavorable, unintentional, significant that results in an economic unfavorable event happening. So really and truly, insurance is that product. And it's not only insurance, but there are several other solutions out there that can help mitigate. But insurance is one of the key products that take into consideration the economic realities of a loss of life or an illness or a loss of a job. And it also takes into consideration a larger investment or a larger fund that could be to the relief of a family experiencing this trauma at this particular time. So that's a very sophisticated term for what insurance is, the jargon being used within the industry, but really and truly is your safety net. It is your vet's money. It is your pocket money. It is that additional $100 bill you have in your pocket should something arise. Is that $5 that you put in your back pocket? Should you go by a bar, they say you want to buy a pack of nuts. Okay, I can buy the pack of nuts, although, you know, things may be a bit tight. So it really is that vet's money safety net component in a more structured, formal, contractual way that helps to provide against financial burden or hardship.
Wow, thanks for that definition, Romel. Talk about sophistication being simplified. Very, very well, very, very well. And without further ado, I'm going right on to Raymond. Targeting the insurance guys tonight. Based on your experience, Raymond, working in the field of insurance and being an advisor, what are some of the packages that you would say are available to young people across the Caribbean? And how are those packages offered? How are they beneficial to us?
Oh man, that's such an excellent question, and I just want to piggyback on what Romel would have just started with. Such a phenomenal response that he gave to the first question. I usually say that if you don't have a parachute by the time you do need to jump, it's already too late.
Yeah.
Right? Basically. But I always say the benefits of having insurance are always in direct proportion to the risk or consequences of not having any or not having enough. And so the greater the risk, the greater the benefit that it would have to the person who needs to take out the insurance or needs to benefit from it. And I needed to start by saying that because with regards to how the packages can be structured, I think it's more important to focus on what the packages can do, because I mean, let me tell you, there are a plethora of benefits that you can get from an insurance package, but you really need to focus on this particular term, right? And I think it encapsulates everything that we mentioned so far, especially about economic loss. It is income replacement. Right? Where there's regards of income loss for you or for a loved one in the event that you or the loved one passes too soon, lives too long, right? Retire, or you become really ill or disabled. I think that's the main thing that we need to focus on with regards to how the packages can be structured, and the benefits really change by dynamic, whether you're single, self-employed, pursuing home ownership, you have a family, you have a private corporation, something that Romel may know about very, very well, given his level of expertise, or maybe you're just an incredibly wealthy and individual and you simply want a tax-free transfer or injection of funds to occur at your death or incapacitation, or at the death or incapacitation of a major shareholder or somebody else you really dearly care about, who needs to benefit from the value of what you would have given to a business.
So what you are telling me is that if I have an insurance plan and I happen to fall ill, or as the sole breadwinner of my household, I unfortunately, God forbid, pass away, or I'm into business and I have let's say I'm an entrepreneur and I just started my business and I want to avoid risk at all costs, right? You're telling me that all of these things can be covered by insurance?
Yes.
Yes, essentially.
Yeah.
Wow, that is amazing.
Alvin, Raymond said something important, and it really is about there's a plethora of terms. There's several different events, economic events, significant economic future events that insurance is really designed to cover. And just to break it down for the financial literacy side, what happens is everybody see insurance as insurance, but they don't realize that it is a building financial plan of various terms and conditions and agreements. So what's happening in the market is now I'm saying I got insurance, Raymond has insurance, but Raymond is getting benefits for disability. I'm not getting benefits from disability. And then there's that thing like, oh, I've been shortchanged, or I don't understand really what is insurance. But really is a contractual agreement with several different terms, conditions, events that significant events that it takes into consideration. So when you go to sit down with an insurance agent, you don't go and say, I want an insurance plan, and they bring you this one fixed solution. You got to say, hey, listen, this is my risk. My risk is my family is prone to disabilities, or my job exposes me to disabilities, or my family has this particular illness that is going to expose me to some future illness that is genetic or inherited, that's family specific. Or I'm a small business owner and these are my risks and this is what I've identified in my risks. So can I purchase a small business plan to cater? When you go to the insurance company, you got to negotiate these things. You got to present your risk. You got to present what are the real economic situation, your personal financial situation, and tailor. But what we have now in the market is that people presented themselves for an insurance policy. They hear, oh, they get $100,000. I only get 500. And then there's a big noise. They hear Raymond benefit from disability or loss of income. I didn't get loss of income, but you purchase small business. You purchase small business risk. Your small business is not at risk.
What I'm getting here is that insurance packages are not necessarily a one size fits all.
No.
So when I go to my financial advisor within an insurance firm, let's say I go to Raymond, I can't come to you, Romel, because you know I'm in that area. Right? But when I come to my financial advisor and I let them know of my financial standing and my financial situation and possibly my financial needs, then that advisor will be able to create a package that is tailored specifically for me based on my standing and my needs.
Yes.
As opposed to saying, listen, this is the 3 packages we have, and people like you, that's the packages you get or you take.
Exactly.
Right? So it doesn't work like that.
No, it doesn't, Alvin. And first of all, you don't even get to select a package. We don't offer you a fixed package, a package 1, option 2, option 3. If we have not sat down with you and did a financial needs analysis, if we have not looked at your numbers, if we have not taken into consideration your family history, your medical history, the type of career that you're involved in, all these things, we don't even get to discussing packages. The first thing we do is a financial needs analysis. Okay, tell me a bit about yourself. Tell me where you work, where you want to end up. What are your future goals? What is your current salary? What are your living expenses? Tell me the age of your mom. Tell me the age of your dad. Are you married? Are you not married? Are the children involved in the situation? And then based on those needs, I start as an advisor, to kind of get the understanding of which option may be the best option out of the 3 options. But at that point, it's still green in the conversation. We still got to trash out a lot of other variables and actually go through them. And what I always say, insurance is like a car with a bolt on, yeah? Or it's like a product. It's like a product with a bolt bolt on. So it starts with a basic structure. We know you want life coverage. Okay, but there's accidental death and dismemberment. There's total disability. There's critical illness. There's an investment component. Okay, based on these things, this is your suite. These are the several terms that we can cover under the insurance agreement as a bolt on. How does this fit into your financial reality? How does this fit into your personal situation? Even before we get talking about a plan.
Brilliant, Romel. What? Odion. I hope you keep that on the insurance boards too much. I go abandon the insurance fellas for a little bit. I come into you now.
Not at all. I actually found a lot of the content very interesting, and I have some questions I think the ordinary person would like to ask. But I guess that would be later on in the conversation.
Yeah, man, definitely. But from what I gather so far, you can't just walk into an insurance office like how you go walk into a supermarket and pick up a product, right?
Yeah.
You have customized products that are tailored to suit your needs. So for the viewers out there, I mean, it's really good to have a financial advisor. It's good to seek the advice of those professionals. That's what they do. That's their field. That's their area. So whether you want to take the insurance out now or not, go in and speak to somebody. So you could create a plan for the future. You could determine, okay, when you think you're ready to get that insurance plan that is most suitable to you and your needs, you already have an idea what is available to you. You already know where to go. You know who to talk to. So pay close attention to these points that the gentlemen are making, because they are integral in alleviating financial difficulties that will affect you later on in life. But moving on to Odion for a little bit, right? Because the insurance boys had a whole segment, right? And Odion, I know in the Caribbean, we tend to have this mentality that once we have money, life nice, things sweet, we could spend. In fact, one of the soca artists, Patrice Roberts, she's singing one of her songs, "I'm fetting out my money till all my money done," right? But in your own words, Mark, how important is money management?
I don't think we can stress enough the importance of money management and the lack of it being taught to the youth in the Caribbean. I know I would have done a few seminars, one mainly on budgeting while I was the treasurer of the guild at UWI, and I would have done a couple more seminars when I got back in Simmons, just as a youth advocate. But yes, unfortunately, we have a lot of those songs and a lot of social media presence that encourages you to spend without really thinking too much in the future. And I say it's a bit unfortunate because some persons who can decipher between entertainment and reality. And then there are too many persons who take that information, that social media influence to heart. And I can't fault a lot of the youth, because it's really saying once bitten, twice shy. And for those who have parents who would have suffered from the failure of things like Clico and British American, you would then have it in the back of your mind. Well, my mother and my father saved and ensured them for the future, and their future is gone. So at this point, I may just spend it while I have it. I'm not sure about the future. I'm not sure what the future holds. But I think that is still a dangerous mindset. And we're here to discuss it as well. Even though you may not want to go the route of insurance, you may have other investment opportunities that you can use so that you are prepared in when that time comes for you. So as I said, you can't stress the importance of money management, and we need to educate a lot of youth in the Caribbean about this more, and I'm happy for this platform to do so.
I like where you stay in this conversation. You're trying to get critical on the insurance guys. So but thanks for your insight and the fact that you highlight that insurance is not the only way to save And that really brings me to the next point, and I would like for each of you to give an input on it. What are some of the ways in which people can really save in this environment, in this current state of affairs? Because what we have seen over the years, and like Odian highlighted rightfully, we've seen the collapse of financial institutions like that of Clico, British American, and many others. We've seen the collapse of even banking institutions within the financial sector, right? And so that has really tainted the trust that a lot of our people have in financial institutions. In fact, I have heard many people saying that, I am better off saving my money under the mattress, like my mom and my grandma and my great-great-grandma would have done. That's what I hear a lot of people saying. So, while that may be all well and good, what are some of the options that we can really highlight to people, and how can we restore hope and confidence and trust in our financial institutions within the Caribbean region? And that's open to all of you.
Okay, well, if the other guys don't mind, I'd like to take a crack here and jump. But excellent point that it was raised just now, especially with regards to Clico and how it really impacted on how the market feels. I still think that it's especially because of what happened with Clico that it makes absolute sense to still seek out a financial advisor, right? To really get clarity on that whole situation and how it should not have a bearing on your personal choices, with how you would pursue your personal goals. Because at the end of the day, there are some things that we will point you to, that we will know about, that where financial services and the financial markets are concerned, quite frankly, you may very well be a little child out there in a hardware store, right? You have no idea, what can actually come your way to knock you down, to bruise you up, right? And it's so important to make sure that you have a financial professional on your side. Unfortunately, or I should say fortunately, the insurance industry is one place where you will find that personal touch, that personal advice. And I mean, when you hear about the Clico situation, I mean, even for me, I have to agree that it was an incredibly disastrous and disheartening situation. I sit and I listen to the client or the prospect, and I hear their heart and what they feel about it. But then in siding with them, I also have to say, hey, listen, what if it can provide some context to you? Would it help to make how you feel about insurance, how you feel about the insurance industry? Would it help to cause you to have a restoration of trust again? Because we are here for your best interest, really and truly. What happened with Clico was really unfortunate, right? But it was a mixture of variables that are so unique to Clico's situation.
Right.
And it had a lot to do with politics and a lot to do with the fact that it was around this time that the recession had really kicked in full gear, right? And so what we saw was a collapse that really and truly, if it were any other financial institution, whether it be CIBC Bank, which we know is incredibly huge, whether it be another financial institution like Fortress, it could have caused each and every one of those companies to collapse in the same way, because what it presented to Clico was an incredible situation where they were required to liquidate a lot of their assets that they had holding on to. And they were required to pay out incredible amounts of cash to a lot of the shareholders and investors at that time. And so, even the banks were saying, hey, you know what, we were lucky that it was not us, right? Oh, wow. Banks were saying that, mutual fund institutions were saying that Clico just had that specific situation that really was unfortunate for them. But when you look at the other giants like the Sagicor and the Guardian, you really have to also talk to the I see you guys smiling. But you have to talk to the financial advisor and find out how these companies are performing, how they really govern, all these different things, because it can really help you to have some insight into how your money is being treated and how it's being handled, and how you can be assured that regardless of what happens going down in the future, you have to be protected, hands down, right? You just have to be. I think Romel is itching to jump on this and say something.
But just before Romel jump in, I must say thanks for the context and clarity that you've provided, Raymond, because this is a topical issue that has gone on for many years, and the failure of these institutions has really impacted the financial sector and the confidence that our people have in financial institutions in the Caribbean. And so thanks for providing that context and quality and clarity, because oftentimes, sometimes we only go with what we see and hear in the media. We don't delve into the depth of the situation and how it's unfolding and what the outcomes are. So, it is quite common in the Caribbean. Something happens today and it's on every front page, it's in every headlines. But as it progresses, you don't know what are the outcomes. You don't know how other institutions in the sector are putting procedures and policies in place to avoid tragedies like that from occurring within their institutions. So I think that was very important. Romel.
Hey, what's up, buddy? So we are all business graduates, university graduates. And one of the things I just want to start by prefacing my remarks and saying is that we know that various economic circumstances and factors impact businesses always. This is COVID in 2020, from 2020 to 2021. And we've seen the impact it had on many companies, not only companies within the financial sector, but companies within the retail, the travel industry. We saw the impact. Unfortunately, at that time, around the financial recession, or I think it was 2008, 2011, we saw that CLICO and British America was stressed in a particular way that unfortunately resulted in their demise. But it's not to say that there's any specific issue or an institution-specific issue. It really was, these were the factors at play, and you left your crease too wide. You were batting too wide. You didn't protect your stumps properly. At that particular point. And as you said, you asked for several examples in terms of how financial companies and insurance institutions has responded. They've increased their stress test measures. So now we know that something like a financial recession, and now in 2021, we know things like COVID and a flu-like pandemic now could actually bring a run on to the business. So we're increasing our risk profile, we're recalibrating our risk profile. We saw the implications of certain things, not only in Barbados and not only specific to CLICO and British America in the Caribbean, but we saw even in England and the USA, the whole move for greater FATCA, anti-money laundering, because of events that was happening within those particular regions. And today I'm seeing that many institutions within the Caribbean, Barbados specifically, has enhanced FATCA, AML, anti-money laundering reporting, various due diligence measures, So one of the good things that has resulted from the stress and the unfortunates of CLICO and British America is that the company, the insurance and the financial institutions, the financial services commissions, the central banks has really paid attention to a lot of the lessons learned and has really strengthened their capital reserves. They look at their interest, were their interest too aggressive, they look at their risk profile and stuff like that. And while I cannot provide, or while I don't know, being very honest, the reasons why CLICO and British America really crashed, and I know it has left a very sad spirit amongst a lot of Caribbean nationals. I was a part of the team that was able to write a solution, and I say that not to glorify the event, but I say that really to say, Alvin, while I was there in the trenches, reviewing contracts, working in the office, in the back offices in Trinidad, in Barbados, in the Eastern Caribbean, I recognize that there was still a need. So you asked the question before, although the company has collapsed, you like, should you still go to a financial advisor? The real question is yes, you still need to have that conversation. You still need to be assessing your personal risk and making sure you have that safety net. And as I said earlier, your vet's money. Because although the company crashed, that did not change the need of Brother Brown or Sister Joan or David from down the road, because these guys were literally knocking at the doors and coming to us and sitting down with us, with judicial advisors, with the governors of the central bank and saying, hey, this is my pension. I've worked all my life. So I said that to say no company is unique for any external factors. And we know that insolvency, business risk, failures are common part of operating a business, but there was still that need. And one of the things that I am happy to see is that the institutions responded in such a way that we did not leave Guardian by itself, or we did not leave British America or Clico by itself, but we recognized we had a responsibility, and that's why there was a general discussion around how we move and how we chart the way forward. I know it has created distaste, but it should not stop you from going to the doctor. One unfavorable event should not stop you from checking about your health, your financial health, and making sure that you are on path towards achieving your financial goals. And that's my perspective on that.
Wow, that is a heavy one, right?
Yeah.
That is a really heavy one. But
a part of that heroic move.
Yeah.
You still got a plan. Things happen.
Yeah.
Things happen in
Yeah.
reality.
Yeah.
And you know what?
And that is the nature of life, right?
Exactly.
The unexpected will always occur, right?
Yes.
But what really defines the resilience as a people, as a business, as a society, is how quick you are able to bounce back.
Yes.
And not just bounce back, but bounce back stronger than you were before.
Exactly.
And put structures in place, like you would have mentioned, to avoid further tragedies like that from happening in the future. And again, this is part and parcel of how one can also restore hope.
Exactly.
In these institutions and so on, right?
Yeah.
Mark, I see you smiling. I see you smiling. You want to comment briefly on anything that the gentleman said?
No, I just still want to ask. So, what are some of the opportunities outside? Sure.
You know what's coming.
Because I still wait to understand that part. Because I mean, yes, we shouldn't be deterred. I myself have insurance, but I still try to back up plan in other areas and in other aspects.
Yeah.
Simply because I could just think about that moment being 60 or older and say, boy, I supposed to collect a nice $200,000 now, and all of a sudden this company gone and all my eggs in one basket. I am counting on this on 60 something just to hear my $200,000 is not available.
Oh,
Good point.
Right?
Yeah.
So yes, I understand that shouldn't paint a picture, a distasteful picture for everyone to say, oh, that's my reason that I'm not going to be insured. So what are some of the other ways?
Thanks, Odeon.
We can be prepared in the future.
Thanks, man. Thanks. Ramel, I heard you kind of jumping at it, so I want to give you that courtesy.
Exactly. Like, and I guess Raymond, you would agree too. Yeah, we are in the business of insurance. I was in the business of insurance, but financial education and literacy don't only stop at insurance. I do advise my customers to go and take out fixed term deposits, to invest in mutual funds, to explore mortgage agreements, to look at saving accounts with good interest rates or favorable terms and conditions. Delve into assets, and any good financial advisor would always advise their client to diversify their portfolio. Now, the thing about it is, and I am biased towards insurance. Let me put my hand up. The thing about it is that here's one of the simple secrets behind insurance. When you put let's say $10 into a savings account over 5 months. That's $50, right? You are actually only getting interest on the 3 months average balance of that account. If you were paying a premium of $10 into an insurance policy and something happens unfortunate to you at the end of the 5th month, you are going to get the cover that was promised. When you go to your bank account, you're only going to get the cumulative balance, that being $50. So when you look at future significant economic events, do you want $50 with an interest, let's say a $5 interest, $55, or do you want $100,000 that can take care of your daughter, that can help with burial funds, that can really stabilize your family? And that's the blessing about insurance, because it doesn't cap. So when you put in your premiums and you're paying it, should something happen to you, we need to deliver on that promise. And the promise being the level of coverage you apply for. If it was $1 million, 500,000, 2 million, and you died month 5, month 10, we need to deliver on that $1 million promise.
Romel,
we're saving. We're saving. You only get your balance. We're saving. You only get your balance. You know, and let's be real. And if you're investing in mutual funds, they will say, oh, but the bond is not payable until this, or oh, the term is not due. You gotta wait 2 more years. But you got a real financial situation in front of you, and insurance is the only solution there is that is going to give you accumulated advanced balance outside of what you've invested and contributed into it.
Listen. You could take the boy out of the insurance, right? But you can't take the insurance. Like for a moment there, I thought this guy was selling me something there,
If it wasn't already covered, I would have bought from him.
Yeah, I know.
I know. Listen, it's about a passion and a love for you doing, and I come back to Mark. You were talking about money management and investing and stuff like that, and I said my body of financial education and literacy and knowledge did not come from any book, did not come from any classroom. Although we studied accounts together, all of us went to university. To be honest, these learning institutions provide and prepare us with more math as a science,
right,
and accounting as a science than as a life skill,
right.
And that is what is missing a lot with respect to the financial literacy program. We don't want to know how only to add 1 + 1 = 2. We want to know I only got $2. My stomach is hungry. I'm hungry. My belly is hurting. The light bill is due to pay. What do I do with my $2? No, that's a real life situation.
Yeah.
It's not a simple arithmetic or addition. It's not math as the science. It's math as in this is life choices. No, these things have serious impact. And as I tell people, have no fear in sitting down budgeting. Some people think that only the person receiving.
Romel, I continue there.
Okay.
Because you're hitting into all of the points that we have for the discussion, and I want us to spend a little time on investing a little bit, because you touched on that briefly, and budgeting is also an element of the discussion. But in terms of investing, no more than ever, because of the fragility of the times we're living in terms of economy and spending power and all of those things, everybody in our society is trying to maximize on the value of their dollar. As we Caribbean people like to say, we're making every dollar stretch. So everybody is looking for a way to make their dollar stretch. And some people, unfortunately, are getting caught up in a lot of schemes. Where they are losing thousands of dollars, right? It's working for some, it's not working for others. So we are trying to go with this part of the discussion is where should people, especially our young people, because our young people, we have adopted a culture, what I like to call a quick and fast culture. We have $100, we invest it, we want to see returns on that within the next 24 hours. That could lead us down a very dangerous path. It might work for some, it may not work for others. Where should we really invest? What are some of the options out there for investing, right? And I will start with Raymond.
Yeah, no problem. And I mean, Alvin, to your point, that is going to happen because that's the nature of the age that we live in. We live in an age where you can put food in the microwave for a few seconds, boom, it's hot, right? We live in an age where you want to send a message to somebody all across the world, type it in, hit send, it's there, right? It's that kind of microwave and WhatsApp kind of culture. And so when it comes to money, it's easy to feel like, hey, you know what? If these guys just tell me this is what I get in return and this is all they need to put in, then, you know what I mean, they're gonna go crazy. But I think it's so important to have that financial literacy element behind it, because if you understand anything about financial literacy or money at all, you know, money doesn't work like that, right? It needs to have a vehicle. Obviously, in a structure like how the circles are designed, if there are going to be people, the majority, who do not benefit from getting involved and investing their money. And there are people, you know, who still ask me about it today. Raymond, would you suggest that I get involved in this? I say, hey, listen, you are not protected. Okay, this is not regulated. And if you get burned, it is because you took it on your own risk. That's all I say. I don't tell them, hey, listen, don't do it.
Right.
I don't tell them, hey, go and do it. But I will say to you, you are not protected. And it's these kinds of schemes and scams that have been designed to make sure that there's a certain person who gets all of your money and you get a small portion, or maybe even none at all, right? But with regards to investing and just dealing with the question as it is, I usually like to say to young people, there's no one size fits all strategy. It really boils down to the investor. What is your risk appetite? What is your investment capital or budget? It really changes dependent on that. Are you in it for the long term? Are you in it for the short term? What is the purpose of the investment? And these are questions you really need to be, you know, sitting with a personal financial advisor and asking. And are you a personal investor, or are you going through a third party, right? That's an important consideration. But what I will say to, you know, persons looking for ways and means to get involved is to pay attention to the 5 main asset classes and determine, based on the level of risk to return, what you're going to get involved in. And it's really, again, going to come down to what you can handle. What is your appetite for risk? And so when we talk about the asset classes, the 5 main ones, and I know you guys know these ones, is property, equities or shares, bonds, commodities, and cash and financial markets, right? And it's really determining where you're going to put your dollar, how you want to see it manipulated, moving. If you have no problem at all seeing it dip for a little while before it comes back up, and that's all part of investing, right? But it's really important that you take your time, do your research, and if you really care to see how your capital is going to grow, you are going to need to do that research, right? Or again, have the conversation with a personal financial advisor so that you can make the best decision that suits your financial situation and where you want your financial situation to be, right? That's what I would say to that question.
I mean, Raymond, let me tell you, no matter what you decide to do with your money, again, people, it is important to have a financial advisor. It is important to seek advice from the professional people in the field where they can better explain to you. And Raymond made a very interesting point. He said, when you are seeking to invest your money, do the necessary research before investing. Research. Now, I don't want us to use the term research loosely, because these days you can do research and you can get information from a plethora of sources on the internet. Now, you know, not all information, we have to admit, not all information is good information as well. So when conducting your research, my advice also is to find your information from reliable sources, right? You know, and if you're uncertain about something that someone is trying to sell you, it wouldn't hurt to ask a friend, ask a colleague. Swallow your pride. You don't have to feel shame. Come on, we don't all know it all, you know. But as a people, we can rely on each other. We can support each other. So, you know, ask somebody. Hit up a financial advisor. Hit up a colleague. You know, somebody that you're familiar with, somebody you trust. Say, hey, what's the deal with this? You know, And while we're on the topic of investing, and Raymond highlighted some of the ways you can invest, you know, we would have seen how society has evolved over the years. You know, there was a time your go-to would be through a bank, right? As your vehicle in terms of you know, investing your money. People open savings account, checking account, you know, like Kevin Hart would say, the way my bank account is set up, you see, I have a saving account and a checking. but seriously, you know, fixed deposit used to be a popular way in the Caribbean, where people would put their money and just leave that there. It's like, you don't have that money, and in a couple of years you go and you have this big return on. But as the financial sector has evolved, we've seen different opportunities emerge. And today a popular one and a very topical one is cryptocurrencies and Bitcoins and all of those. What are your thoughts on those from the knowledge you would have accumulated on those things so far?
Okay. So that's me.
Yes, Raymond, you can go.
Okay, no problem. I would have had a personal experience just being involved in the foreign exchange markets. As a matter of fact, that's where my whole journey started. And being involved in foreign exchange trading, I mean, I would have learned so much, right? And just on the basis of how money moves and how digital it can be, right? And so when it was introduced to things like cryptocurrency, then it was not all the alarming, because I believe that is almost the direction that the world wants to move in, where most of the financial transactions that are going to be taking place concerning deals, whether large or small, are going to be digital, right? I mean, right now, if I just take my phone and I open my CIBC app, I don't want to transfer funds from one account to the next, my account to somebody else's account. All I do is hit, you know, this amount, my account to so-and-so, and quickly, right, I will see my balance deducted. And they will quickly see their balance increased. And it just goes to show you how much money can actually be a digital concept. And so cryptocurrency is almost a way to kind of create a digital space almost, where that particular money, that particular form of transaction will be operating. And then therefore, you know, it then has to improve on the technology that we use. I mean, you go into a store now, and eventually you're going to have a card that you know has a Bitcoin balance on it. Eventually you're going to be using your phone app, all these different things to pay for these goods and services that you want. And I just think, realistically speaking, it is just a very future focused form of transacting, right? I believe it's where we're going. It is good, I believe, to have a little bit of money invested, because you don't want to wait until cryptocurrency becomes incredibly huge and then you're now trying to catch up, right? There was a point where Bitcoin was only worth or valued at $50. No, no, if you know the value of Bitcoin, or we know the value of Ripple or any of these other huge ones, their value is increasing every single time, and there are companies now that are benefiting because they own piece of the cryptocurrency and they're giving you a small piece that you can purchase for a lower amount, right? What you really want to be doing is making sure that you can have a large piece for a low price, right? You want to buy low so that at the time that you need to use it, you can actually sell high, right? That's just my view on it.
I'm really happy you touched some very interesting points, and you spoke of that element of it being instantaneous or at your fingertip, right? And I have to make reference to me living here in the UK. When I moved here last year and I opened my bank account, I didn't have to leave home. You know, I set up my bank account, and within 24 hours I could have started using my bank account and my card and everything, my digital card. And within 3 days, in my mailbox was my physical card, which I hardly ever use, because even when I ride the bus, I just tap this and the payment goes through. When I'm at a point of sale, I tap this, my mobile phone, right? The phone that everybody uses to talk and text. We use it here as a normal way of life. So I literally walk around here cashless, you know, and it also helps me to not spend in a wild way, you know, not spend recklessly, because every day I get a update from my phone which gives me a summary of my daily spending, and then I get it on a weekly basis, and then I get it on a monthly basis. So it helps you to keep track of what you're doing. It helps you to it reminds you, okay, it's the first of the month, so 2 days before it will remind me my rent is coming up. So I know, well, okay, in 2 days I have to anticipate that big hole that will be left in my account after this couple hundreds of pounds leaves my account, right? But you know, cashless is the way forward. I mean, that is where the world not is moving, has moved, and sadly in the Caribbean we are playing catch up. But hopefully someday in the near future we will get there, and we wouldn't be too far behind, you know. Moving on. You had a point, Romel?
Yeah, I want to use myself as an example. So Raymond seemed to be very au fait with foreign currency and digital trading and stuff like that. I'm a financial advisor, but I've never studied that area. I really don't understand. So really and truly, my point here is that financial education is ongoing and is a continuous learning process, so you don't stop. I may know the commercial bank products, I may know insurance products, I may know products of asset management firms, but I've never had experience in foreign exchange trading or cryptocurrency or digital currency or Bitcoin. And I say that, and I confess it here on this platform. What I now need to do, as you pointed earlier, is to go and do that research.
That is a very, 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 very good observation and point to raise, Romel. And we're moving on to the budgeting element now. And I want to target Odion for that element, because listen, I have worked with this man in an organization, right? And I kid you not, very few organizations I've worked in, I have experienced people who gives accountability for down to the 25 cents that was spent. And that was the experience I had with Odion. So he's a man that is very well experienced in terms of budgeting. And the first question I want to pose to him is, why is budgeting such an important component of any organization, of any individual? Why is budgeting such an important component, Odion?
Me as a person, I would say it speaks to what we've all been discussing here this evening already, in terms of looking ahead to the future. And because with budgeting, you know how much you're spending right now, and you have an estimate as to how much you would need to save. But it also helps you to have a sense of where you're spending and what you're spending too much on. And for example, when you build out a budget for the month and you say, okay, I have about $600 I want to dedicate towards entertainment. However, this month is Hennessy artistry and a bunch of other fets. As a matter of fact, this is crap over month. Let me say it's August, it's crap over month. That $600 is gone easily in maybe about 2-3 fets. So with budgeting, we are able to plan accordingly, and we can see what we want in the future. Okay, I want to take a vacation this year. This vacation is going to cost me XYZ dollars. How do I go from having an income of, let's say, $1,700 per month? What areas can I squeeze, spend a little less in order to afford this in the future? Same thing with the saving. When you go about budgeting, how much am I going to dedicate to savings? How much do I need for rent? How much do I need for food? And you see again which areas you can really tone it down a bit to increase your savings and plan better for the future. So for me, that is really the importance of budgeting there. Unfortunately, again, I don't think a lot of youth have realized the importance of it. And I think they're just going down the road of instant gratification again, simply because you're not certain about the future. Because you could die tomorrow and you can say, so what happened to my money then? Right? I can leave it for my brother, I can leave it for who I can leave it for. Might as well spend it, and that's why I think we have a lot of interest in the social activities with especially the youth now. Everybody wants to be out and stunting. Right? And we could see that with the events, the population attending these events are increasing. Because persons just want to be outside. It's not the situation for it right now with the pandemic and everything. But even before that,
I would hope the pandemic was an opportunity for people to save a little bit more.
I would kid you not. This pandemic showed me how much I spent unnecessarily in Lyman. I would not lie for you. When it struck in Simmons and the Grenadines, in around March last year, because I had my grandmother living with me at that point, I wouldn't go out because I wouldn't risk her life. She was 91. So I wouldn't put her at risk. So I would say, you know what? I would simply stay home. I would carry my mother to drop her to work to avoid the public transportation for her. And I come right back home. And from then till June, unfortunately, my grandmother would pass in June. But from then till June, I really would sit down and watch how much money I save. Just spending gas alone, because it was just gas to go to my mother's workplace and back home. I was amazed at the kind of money I save. I say, I need to stay there a lot more. But see, again, well, just back to the question of budgeting. I can't stress again, being a key component of money management, how important budgeting really is.
Odian, I'm quite curious to ask, as an educator yourself, what has been your experience educating young persons at that tender age about money management?
I think at the time of the seminar, they would say yes, they understand. Mm-hmm. But when they start working for the money, it's as though they forgot everything they learned. Mm-hmm. And I will have to speak from my experience, because I remember as soon as I started working, I remember I started partying a lot more. That year was actually the first year I played Carnival. I've never played Mass before 2013. I started working in 2012.
That's his investment.
I started working in 2012, 2013. I played Mass. And I played Mass maybe 3 years straight after that. But I think that's where I was at that point in terms of being a youth. I never learned about budgeting form at that time, but I'm getting that check in my hand directly and saying it has Odian Hillocks on the check. This is my money. I am accountable for this to myself and myself only.
Right.
I was like, you know what? It's time to do the thing.
Yeah,
right.
Time to live it up. But you know the interesting thing also is it is quite easy to get carried away as an inexperienced person when you're receiving a salary on a monthly basis, because you realize you would spend this month and then next month it's like it's topped up again. So it's like you feel limitless. You feel like you have that spending power. You feel like, yeah, man, I could blow out $1,000 this weekend. You go come back next weekend, right? But there's a lot more to look at than just the here and now and the instant gratification as you put it. So
the experience for me, that really helped me to enforce budgeting was definitely Yui.
Right.
Because trust me, you had to stretch as like spaghetti. You had to stretch. It wasn't no elbow macaroni. It was a long noodle. You had to stretch that thing, but definitely attending UE, especially in a foreign country, really helped me to learn of the importance of budgeting. Because I was sitting down with my mother before the semester, so this is how money going, and then when I reached halfway through the semester and realized that is not how the money went so far. Something needs to happen, right? Ramen have to eat and thing, because the money don't reach, and they have to make it till December. But yeah, those experiences invaluable. You go attending a university, invaluable. Whether it be at a landed campus or even open campus, because at the point when you're paying out of pocket, you have to learn how to budget to fund your education.
Right.
Because I would like to say that a lot of youth I've seen being very motivated to continue the education through open campus and finishing it. So that for me, they have to learn the importance of budgeting at that point.
Odian, I am so happy you brought this point up, and I'm going to ask a question to the insurance guys here now. It is an uncommon practice in the Caribbean, but I know it exists. How can young people like myself invest money so that I can secure my children's future in terms of funding their education when the time comes for them to attend university and so on? Are there any packages available? Are there any vehicles that exist within the funds you have worked with, from your experience, that people can really invest in, or kind of like having a trust fund and so on and so forth? Romel, you want to touch on this a bit for me?
Yeah, so Alvin, it named life insurance, right? But it is used for several different reasons. It's used for several different reasons. So we call it sometimes an educational saving.
Oh man.
We use it as death insurance. We use it as pension. You know, there's several different uses of a life insurance policy. So don't get fooled by the name life insurance. You know, it's not only about death. For instance, let me break it down here. If I have a daughter, and I know in the next 20 years that she's going to, or 18 years, she's not going to be going to university, probably going to pursue her master's. What I would do is buy a life insurance plan that is going to give me the proceeds over the next 20 years as a final cash out payment. So it's not necessarily tied to the event of death or loss of income. It's tied to mature and to grow over the next 20 years. So when my daughter is age 20 or age 18, it actually gave me the proceeds.
Brilliant.
And I know some insurance companies refer to this educational savings plan. All you do is look at the plan that's going to give you, okay, the university say is $150,000 to send Shakira to school. Okay, cool. Over the next 18 years, can I get a plan that in the next 18 years, I can get $150,000? Oh, Mr. Holas, we got a plan right here for you. Next 18 years, you receive those proceeds, but you know that your specific use of those proceeds is to support Shakira's education.
Right.
Yeah, so don't get caught up about the whole title of life insurance.
Romel, I will get personal now, you know. I find you calling Shakira with great confidence. like you have a little hidden somewhere, man.
Soon. But I wanted to comment on something Ode said. He said he only started budgeting at university. And let's be real, that's age what? That's age what? 21, exactly. And that is one of my issues. I find we introduced the concept of
that's
budget.
when I learned.
That's when he learned
the importance. So
Right.
I did it before, but not necessarily stick hard and fast to it.
Right.
I learned importance in you for sure.
And it's because you had that lived experience at university where you had to budget. I find that we give our Caribbean boys and girls financial responsibilities too late in their journeys. Yeah. So we gotta introduce it. You gotta budget for school. I mean, let's be real, Alden. When you look at Canada and you look at the United States, you gotta pay for education, primary, nursery, straight up to master's level. You get me? In the Caribbean, we've created a safety net that primary is free, secondary is free, university is somewhat free. Then you pay only when you get to master's level. So we only really start understanding what it is to be paying and spending and budgeting and stuff like that very late in our life. If you were a child in the US and you had to be going downtown for high school, you had to start paying for school, you had to start budgeting, you had to start experiencing the realities of financial management. And I think even at primary school, mummies and daddies should be saying, listen, this is your money for the month, tell me how you spend this. You choose. If there's a fair, you choose if you're going to the fair this month, or you choose if you're buying games clothes. if you're going to the carnival, or if you could buy a textbook, you know, but $100 is allocated per week. In primary school, we got up with this idea, Mom, I need $5. She give you $5 every morning, and you live every day as a repeating cycle. And we gotta break that.
We have to break that mentality, and it goes back to one of the points we made earlier, where, you know, we create that level of dependency in the Caribbean. People retiring, and I think we discussed that before we actually started the session. You have people retiring and don't have enough money to sustain themselves for the rest of their life in retirement, and so they have to continuously go to the politician for help, or go to the person, the godfather in the community for help, and so on and so forth. And I have a fundamental problem with that, especially in our Caribbean civilization, because we have this culture that we've created, where today I come to you for a fish and you give me a fish. Tomorrow I come to you for a fish, you give me another fish. Rather than today I give you the fish, but I say, hey, come sit with me by the jetty. Let me teach you how to hold a fish. So you go home with a fish, but you go home with the equipped skills necessary for holding that fish. So tomorrow and the day after that and the rest of your life, you're equipped, and you don't have to come to me anymore, or you don't have to go to anybody unless you're extremely lazy.
Yeah.
You understand? And so I think it is really important, and that is what we're trying to bring across here in this segment, where people are educated and well equipped for taking on the responsibility of their financial power throughout their life, while they live, while they work, and even in retirement.
Yes.
And it doesn't stop there, because the decisions you make now will even affect or impact your economic status of your family in your debt.
Yeah.
As you've heard from Raymond and Romel earlier, in terms of life insurance and how that can play out with where it puts your family, the position it puts your family in after your death. Because some people die and leave a debt.
Yes.
And their family have to bear that burden.
Yes.
And then some people die and leave a fortune. And that propels the economic status of that family and that next generation, right? And so it is really important to factor in those elements. Now, one last question before we wrap up, gentlemen. As we're on that topic of budgeting and the importance of budgeting, is there a set way for people to budget? Is it a one size fits all? Is budgeting sitting down and saying, hey, I'm a millionaire now, I need to budget? Or do I need to budget when I just have $1 in my pocket? Is there a set way? And at which point should I start budgeting?
Nice. Very good question. So, Ovin, I think within asking the question, you kind of answered it.
Right.
You know, there's a person who just has the $1 in their pocket, right? They need to know how to properly dissect that dollar. And then there's the other person who, you know, has access to incredible liquid cash, and they may have the leg room, the leverage to be able to do some other things. And one of the very basic things I would suggest individuals try, and I mean, again, understanding that not everybody has a one size fits all, is to budget based on three things, right? So the first thing I tell them that they really need to consider is what their needs are, or what I like to call obligations, or I'd use the words obligations or obstacles, right? Things that need to be absolutely taken care of for you to be able to do anything else with your money. And then you want to consider your wants. I think earlier, Olvin, even Odeon, you all would have mentioned that there are things that you want to do in the future, like goals, investing in certain opportunities. These things you really need to factor in. Right. And then the third and most important thing, interestingly enough, I actually bumped this to the top when I talk about it, is saving. I believe one of the absolute very most important things we need to be able to do with our money, with our income, is to save. And there are three main reasons why I suggest that saving is important. One, you need the emergency cash, right? Not every single time when a situation arises, when you get sick, when the dog gets sick, when the car needs repairing, that you're going to be able to use your disposable income, the same income that you're using to take care of bills already, right? That's madness. The second thing you need the savings for is a replacement of income. And there's no greater time that we would have been able to experience than COVID in showing where we needed to have a replacement of income.
Wow.
COVID showed us a forced retirement, if I would call it that, right? Where we had a reduction of income, or in some cases, no income whatsoever. And we were forced to rely on, there was one person who relied on savings, and then there was another person who relied on welfare, right? And I think the person who had the savings, who had the safety net, who had the income protection, they would have had a by far better situation than the person who would have been living in welfare, right? You had control over your finances in that time, or rather where your finances were coming from, I should say, right? And the third thing you need to be able to save to do is to invest in opportunities, financial markets, right? And you really don't want to be investing money that you have not saved to invest, to be quite fair, right? You don't want to be investing money that you're using to do other important things with. And so I think it's so necessary that we prioritize saving. As a matter of fact, if you listen to any of the wealthiest individuals in the world, if it's one thing they prioritize, if it's one thing they do first, is to pay themselves to save, right? To save. That's what they do.
Yeah.
And we have a culture where we grew up, spend first and try to save whatever little bit is left back, right? Rather than save first and then spend. And I think that's one crucial way that we have to consider budgeting. If we have a mindset that, hey, listen, regardless of what happens, when my paycheck lands in my bank account, there's a 10% or 20% that's going to go into maybe a fixed deposit, right? Maybe a shares deposit, maybe an investment account with the insurance company, but there's a fixed amount that I am not touching, right? And I block out in my mind that that's happening, because guess what is happening as well? The government is saving your money, whether you like it or not, without you getting to see it.
Wow, that is brilliant.
you have to be responsible for your own savings in the same manner.
Yeah. So Alvin, just to piggyback on what Raymond said, I advise saving, budgeting for the poor, the rich, and the middleman. Everybody should budget. Yeah. And I always say, and a financial advisor should never tell you about your financial position and you be shocked. You should always know I only got $1. Yeah, you should wait for me to say, well, Odin, I realize, after I do my calculations, you only got $1. I feel everyone should know about their financial status, their financial well-being. No one has to tell you about that. No financial advisor, mother, father, banker, asset managed professional needs to come and tell you about your personal financial situation. I feel like we should know that for ourselves. And the thing about it is that sometimes, even with budgeting, as you said, I may only have $1 all in, but when I start to write down my list of savings account and stuff like that, I realize, oh shoot, there's an account that I had at the credit union I forgot about, but that actually has $300 today. So you come to these realizations, or realize, oh shoot, actually Raymond owe me $50. I can call for him now, so I actually have $51. You see, but by going through that budgeting process, it helps you identify the gaps. It helps you identify where there is relief and flexibility. So I suggest either the richest, poorest, or the middleman sit down with a pen and paper or a calculator or whatever and go through that budgeting experience for themselves. Don't let any financial professional tell you what you should know for yourself. And that's your own personal finances and your own personal needs. That's
very well said.
Yeah,
very well said. Odian.
Well, after that, don't put it so. What more? What more is left to say? Man, finish on some strong closing. I agree wholeheartedly.
Wow, gentlemen, this was an amazing discussion. Wow, this is a lot to digest, but I must say it was a very informative session. And I want to thank you so much for giving up your time to be part of this discussion. And oh my, thanks to our most faithful viewers for the generosity of their attention. This was one of many informative discussions we have set for our viewers this season as we continue to talk with business in true Caribbean form and fashion. So again, thank you.
Welcome, man. Thank you.